last year. Mr. Parag Javeri, MD at Yasho Industries, is now joining us. Mr. Javeri, thank you for taking your time out, and it was a very strong quarter for you. PAT is up tenfold on a year-on-year basis. If you can take us through what led to this sudden spike up as far as your financials are concerned, and most importantly, how sustainable is this rate of growth in the coming quarters?
I think what is helping today to grow the company is what we made investment into our new plant at Pakhajan. Also, our investment into R&D facility, which is now giving us a fruit, and our marketing setup, two subsidiaries, one in Europe and one in USA, is everything coming to the play at a one go, and that is helping us to grow the business. We also have a couple of the marquee customers who has come on board in the last one quarter. We were talking to them for our last 12 to 18 months, but now they all come on the board, and that has given us the confidence that the company will grow in the next quarter on quarter with the same run rate. I can say that.
That sounds really optimistic, Mr. Javeri. Hi, this is Snehi also joining in on the show. You did mention some marquee client addition. Of this 42% volume growth that we've seen for the company in the quarter gone by, can you give us a split of how much of this was driven by your existing customer base versus how much was the contribution from newer customers?
Well, I think almost a 30% growth has come from the newer customers, and also some of the existing customers also started buying a larger volume. So it's a multiple effect. But it's not only one thing that marquee, but existing customers also helping us to grow our sell.
Okay, Mr. Javeri, you've also gone ahead and raised your outlook, the revenue guidance, which was at 1,500 crore earlier. It has now been revised to 1,600 crore. What gives you this kind of confidence, and consequently, what will your margin guidance be for FY27 and then FY28 as well?
I think kind of a long-term supply agreement, what we're getting into, and as I said earlier, that we got on board a couple of marquee customers. That is giving us confidence that yes, we'll be able to grow more than 1,600 crores in FY28. As regards to the margins, it looks sustainable because we work with our customers on a formula basis, and that is helping us to gain or lose on our margin on the selling price. If the raw material goes up, we increase the price. If the raw material comes down, it goes down, and we work on the certain percentage profit margin. So that formula is helping us a lot.
Okay. Mr. Javeri, I was just looking at the numbers, and what really stands out to me this time around is that some of the new geographies that you've entered in Asia and African markets, their margins are more or less at the group level. Can you give us a sense of how the businesses in your newer geographies are shaping up, and what is leading to such a quick turnaround in these margins?
Well, as the margins are concerned, there was a supply disturbance, and the people were willing to onboard the the supply chain. That is helping us. Africa is a geography we are working for last 3 years, and now we started getting some fruit of it, and we are expecting to grow much more there. Same thing for Asia. It's not easy to walk into Asian market because we have a giant competitors sitting on that side of the world. So yes, it's a slow growth, but we are making some definitive inroad in that market too. And with all the sustained efforts and also our existing geography, like Western world is helping us to grow the market.
Okay, and Mr. Javeri, while we are talking about competition, let's also talk about the intensity of it and the fact that Chinese players can't continue to dump their products in the Indian market. Is that a concern for you?
To some extent, yes, it's a concern. But we have to find a way to how to maneuver it. And I think so far we've been able to do it so. And I'm very confident that going forward also we'll be able to manage that.
Okay. Mr. Javeri, at the end of the last quarter, your FY27 volume guidance for the entire year was between 35 and 45%. You've done 42 in the first quarter. Is this guidance intact? Are you looking at hiking it after the kind of first quarter that you've seen?
No, I think let's stay on ground and hold it and see that couple of quarters. So we want to hold it at 35 to 45% guidance only.
Okay, so 35 to 40% guidance, that's the volume growth guidance for FY27. But we were talking about raw material prices in the prior question. Has it been a concern, especially because of West Asia crisis? And if that was a concern, is the worst behind us now?
I think the concern of raw material availability on time is that, which is rather than the price, because availability is an issue. The shipping is the logistic is a challenge. So those are the challenges today. What we are facing. Inbound raw materials are not coming on time. Outbound exports booking we are not getting on time. So those are a couple of challenges. But I think despite all these challenges, our team is able to find a way out of it, and so far everything's going good, and we don't see future challenges.
Okay, that sounds good. Mr. Javeri, lastly, if you can give me a sense of what your FY27 CapEx plans are and how are you going to be utilizing them if you are looking at raising fresh money?
We are not looking to raise any fresh money. Let me
Okay.
put that thing in context. But we are going to spend about 250 crores in capex, which were earlier planned at 125 crores. But looking at the demand growth coming to us from our existing and the new customers, we have increased our capex outflow by the doubling up to the 250 crores. After that, about 100 crores will raise the debt, and the rest will come from our internal accruals.
Okay, so earlier the guidance for capex was 125. It has now been hiked to 250, and 100 crore out of that will be funded via debt. Am I getting it right?
Yes,
Okay.
absolutely.
Okay, Mr. Javeri, thank you so much for taking your time out and joining us here on ET Now.
Thank you very much for having me. Have a good day.
With that.